This is the Alt Thinking Podcast by 9 Point Partners, today featuring the DeFi Decoded series in partnership with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing. Hello, everyone, and welcome to DeFi Decoded. This is our second episode in this new series. There's obviously lots to discuss, and today we're going to be unpacking a very interesting topic and something I think a lot of people are trying to understand a lot better, and that's the concept of a decentralized exchange. It turns out that DeFi is disrupting many different elements of financial services. In our analysis, we've identified at least 9 different areas, everything from how we move money to how we store money, how we access credit, and even how we invest. But I think that the most relevant topic today in DeFi, and the one that's attracted the most attention and the most capital, is trading, the transacting of different kinds of assets. But they're being done in a very different way in the world of DeFi than they have been historically. And that's true actually not only of traditional exchanges like stock exchanges, but even traditional cryptocurrency exchanges. And it might seem odd, the idea of a traditional cryptocurrency exchange, given that this industry is barely a decade old. But it turns out that those business models of centralized exchanges are being disrupted. But I think for most people, figuring out how to untangle these different concepts has actually been a bit of a challenge. So fortunately, I've got my co-host here, Andrew Young, to have this conversation with me, and we'll just get right into it. So Andrew, let's talk about this. Well, what is a decentralized exchange?
Thanks, Alex. I'm glad to be here for our second episode. When people think of a decentralized exchange, it can really refer to a number of different applications of this concept. But for the most part, everyone thinks of a automated market maker, or AMM for short. So automated market makers are essentially these types of exchange protocols that are built on smart contracts that allow users to trustlessly swap tokens. And rather than using a traditional order book model that you would see with a stock market like the New York Stock Exchange or NASDAQ, these automated market makers use smart contracts and this ideal of pooled liquidity that allows users to essentially trade tokens for one another. So, and the beauty of it is that because they're a decentralized blockchain-based protocol, anyone can swap tokens using them on the demand side. But then on the supply side, anyone can also supply liquidity to them and act as a quasi-market maker, which is called liquidity provisioning. And then finally, also anyone can list a token on it. So yeah, we'll talk a little bit more about this, but these properties are truly revolutionary.
So we're not talking about a company in the traditional sense where you've got a bunch of technical capability inside of the business, but a bunch of people that support it and build it and run it. This is something that happens at the protocol level. So how is it that these things have been able to scale? The biggest one is called Uniswap. People may have heard of that. And the growth in Uniswap has been kind of tremendous. And actually, the quant desk here at 9 Point Partners Digital Asset Group has just pulled up some of the numbers on this, that basically the cumulative volume on Uniswap has grown 148 times in the first year. And most recently is at $340 billion. And we've seen even cumulative user growth growing similarly at a massive multiple. You know, I think a year ago, Uniswap had 100,000 users. Now it has 2.4 million. So what is attracting all this capital and individual users to these platforms?
Yeah, no, it's pretty crazy. And if you think about it, Uniswap is now actually doing, I believe, more volume than Coinbase. And Coinbase is obviously the largest centralized exchange. It's a $50 billion market cap company on top of the New York stock market after its IPO. I think the thing about Uniswap that is so interesting, and the reason why it has been rapidly gaining market share, is this idea of long tail tokens. So what I mean by that is with Uniswap, anyone can list a token on top of it. So that's very different than Coinbase or other centralized exchanges that require sort of verification, auditing, stuff like that, and also require a listing fee. Uniswap and other decentralized exchanges like it, anyone can list a token. And so what that's led is this massive, what we call a long tail of tokens of Uniswap tends to dominate in these lesser known small cap tokens. And over the last year, as crypto has grown rapidly, the small caps have really taken market share from the large cap crypto tokens where centralized exchanges tend to do better. And that's just been kind of a perfect tailwind for them to grow so rapidly.
So it makes sense to be a token issuer on this platform because you can do it relatively easily. And it makes sense to be someone who provides liquidity, obviously, because you can earn a return. And we're going to talk about that a little bit more. But what about as a user? So, let's say I'm a user. I'm using Uniswap. I have some ETH. It's, in my wallet. I want to go and buy one of these long tail tokens. How can I gain comfort that when I transact in those tokens with someone who I don't know on the other side of that trade, that the swap is actually going to occur? What is the technical mechanism that makes that possible?
Yeah, it's a good question. I think, so just to answer your first question, really, I think the first reason is because it's really, truly the only place to buy and sell these long tail tokens.
Right.
So it's in a lot of ways, it has a monopoly on it, and then also has the best liquidity. In terms of the technical aspects, what's really interesting is that the smart contracts themselves act as kind of the clearinghouse for these trades. And what I mean by that is you're not. It's a new type of exchange where it's not a peer-to-peer exchange. So you're not actually trading against someone else directly, like you would on like the New York Stock Market or whatever. You're actually trading against the smart contract itself. So what I mean by that is you have liquidity providers who are the supply side of the network. They essentially pool tokens into these smart contracts as a collective group in a way. And then the demand side, i.e. the token traders, are transacting against that pooled liquidity that is held in that smart contract. So the smart contract essentially acts as the counterparty to the traders. And that's why people call it P2C, P2C, which is peer to contract trading model instead of P2P.
And the idea of a smart contract is something that is itself relatively novel and new, right? I mean, the idea of a smart contract really only came about in 2014, 15, but was only really implemented a couple of years after that on the Ethereum blockchain. And Uniswap is one of these decentralized exchanges that runs on the Ethereum network because Ethereum has that capability. Do all decentralized exchanges run on the Ethereum network?
No, it's a good question. I mean, obviously, so kind of as we mentioned in the previous episode, Ethereum's really pioneered this whole space, this whole DeFi space. But what's happened over the last 12 months, and particularly the last 6 months, is the rapid rise in activity of these DeFi protocols has led to essentially a massive increase in demand and also a corresponding increase in the transaction fees of using Ethereum. And so what's happened is that it's become much more expensive to use DeFi protocols on top of the Ethereum network. And so what's happened is increasingly DeFi platforms are moving to alternative blockchains, or like I say, just non-Ethereum blockchains. For example, Cosmos, maybe you can talk a little bit about Cosmos, because I know that's a platform that you're very well aware of and help advise. Cosmos is a perfect example of a new alternative Ethereum blockchain that is rapidly gaining its own DeFi market share. Do you want to kind of talk a little bit about how Cosmos is different than Ethereum?
Well, I won't spend too much time on Cosmos specifically, other than to say that Cosmos, like Ethereum, has the ability to stand up an AMM or a decentralized exchange. And they do have one called Osmosis, which has grown in about a week and a half to almost $150 million in the amount of money that's bonded through these liquidity provisioners. So in the context of Uniswap and Ethereum, it's still relatively small. And I do think that for various reasons, Ethereum has this brand name and these network effects that it is still the dominant player. But what we are seeing is in part because of the success that I've just described about new users and new value and new tokens, the Ethereum network is starting to clog up. And we're seeing either these new kinds of platforms like Cosmos or even solutions that are built on top of Ethereum like Polygon becoming more prevalent. But before we get too deep into the weeds here about technical capability and how this stuff works, why is this stuff important? Is I think an important question. It's really great that you can trade in a bunch of tokens and that's fun. And some of those tokens themselves are very useful and valuable, and lots of them are not. But I think that it's important to understand how this technology could be applied, or how it could evolve to encompass other parts of the industry. Is there any reason why this model couldn't be applied to derivatives or to stocks and bonds, or other kinds of financial assets that maybe the listener of this type of podcast would be more familiar with?
Yeah, for sure. I think you bring up a really good point. I think the automated market maker is not dependent on crypto tokens specifically.
Mm-hmm.
As long as the asset itself is tokenized, then it can be traded using this type of automated market maker. So, for example, you bring up a really good example is derivatives. So, for example, a project called FutureSwap actually does an automated market maker for derivatives. Those derivatives are on other crypto tokens, but that kind of shows how this type of model can be used for other asset classes. And then, like you said, it can also be used in the future potentially for stocks. And another use case that is kind of springing up, though it's still very early days, is this idea of using automated market maker for NFTs, which are kind of like digital art.
Right. NFTs, non-fungible tokens, so totally unique crypto assets. Every Bitcoin is the same as the next Bitcoin pretty much, but every NFT is unique, right? That's the difference. Yeah, it's an interesting idea. It's something that I've been researching for many years and trying to understand a lot better. Is what exactly does DeFi mean for financial services? I think a lot of people mistake DeFi with fintech, or they think of it as some sort of niche within fintech. And I don't think that's totally accurate. There are lots of big fintech implementations that have made a difference, in the industry, but mostly they are interfaces that are sleek and easy to use that allow people to interact with the industry as it exists today. And what DeFi is trying to do is to reinvent the industry of today into making it something different. The analogy that I like to use is the idea of digital wallpaper. So there's this old house, and that's the financial industry. And, under the surface, the infrastructure is kind of old and tired. It's not particularly efficient. It doesn't always work that well. But what we've done is put a nice bit of digital wallpaper on it that sort of obfuscates or sort of blurs what's actually happening behind the scenes. And what DeFi is trying to do is to rebuild this house from the ground up, right? With a new foundation, new capabilities. And I think that's what makes it so exciting, is that it's an extremely ambitious area. And that's why I think it's always important to look at some of these concepts like AMMs and say, it's true that $55 billion of TVL, total value locked, is small compared to other asset classes. The market cap of Apple is 80 times as large as that, or whatever it might be, or 40 times as large as that. But it's important to think to extrapolate from the growth, but also look at what it can do. And what it can do, this is what really excites me. I think just tokens alone is fascinating, but I also think that the ability of applying this to other asset classes is really where we're going to see a lot of this innovation occur. So Uniswap is the biggest one. We have mentioned a couple of others. I think what a lot of people try to understand is, well, is there a CEO of Uniswap? And, how do I talk to Uniswap? Is there customer support at Uniswap? And it's a bit of a funny thing to wrap your head around, right? That this is by design supposed to be based on a protocol, or is a protocol, right? It's not a centralized company. But at the same time, there are people that are associated with the project that we know that are very prominent figures in the space. So how decentralized truly is, or how truly decentralized is Uniswap in your mind?
Yeah, no, it's a very good question. I think decentralization is a spectrum. And what I mean by that is the DeFi projects and even automated market makers kind of fall within different areas between totally centralized and completely decentralized. One thing that's kind of become apparent, at least with automated market makers, is the back end is typically entirely blockchain based and decentralized. But the actual front ends that people actually access these protocols is obviously centralized because it's on a website. And what's interesting is for things like Uniswap, what they've done is they've actually they understand that their front end is centralized and relies on them, and there's a company behind it. But what they've done to kind of mitigate that centralization risk is they've actually open sourced their front end. So anyone can deploy their own Uniswap front end, which hooks into the blockchain-based protocol, which is the back end. And it's actually one of the big reasons why there are so many copies of Uniswap now is anyone can, what's happened recently is anyone can essentially fork, which is another way of saying copy, the Uniswap code base and deploy it. And I think that kind of gets into the next question really then is, if the technology is completely open source, what really are the barriers to entry?
Well, that's a really important point, right? Which is, Uni is a token that you can buy. It's worth a lot of money and it benefits from the growth of the ecosystem. That's a whole other conversation that we can have. But what's the moat? I mean, if someone can just copy and stand up another version of this without, running afoul of copyright infringement or IP theft, what stops those new entrants, those copycats, basically from taking over what Uni does? And this is something, by the way, where we have a little bit of history, right? In the last year, there have been examples of this. So can you talk to that for a sec?
Yeah, for sure. So the first, I think what you're hinting towards is kind of the launch of SushiSwap, which came in the fall. And essentially what happened is the team behind Uniswap sold tokens to venture capitalists. And so a lot of the economics of Uniswap are going to more institutional investors. And the Uniswap community, parts of the Uniswap community were against this essentially sharing of economics with institutional investors. And so they banded together and forked Uniswap and launched a new version called SushiSwap, where essentially there was no institutional ownership. And the big thing that they did as well is that they launched their own token with the launch of SushiSwap before Uniswap had actually launched their own token. And what they did is, as users pooled liquidity into SushiSwap, they earned sushi tokens. And so what's so interesting about this is that they essentially inverted the cap table in a way and gave the economics of the platform directly to their community through this idea of liquidity mining, which we can talk more about, I'm sure, in a later episode. And what's interesting is it sort of forced Uniswap's hand and forced them to launch their own token and do the same thing. And just to kind of answer your other question, though, what's happened is more and more projects are essentially doing what SushiSwap did and forking Uniswap and launching their own version. But at the end of the day, the kind of like the barriers to entry and the moats, as you will, for these projects isn't actually the technology, because all the technology is open source. What is the moat, or I guess barrier to entry, kind of comes down to three things, and you sort of hinted towards them. The first is just liquidity. So if Uniswap as being the first one to market, they have a ton of liquidity in their platform, and liquidity makes it easier to transact large trades, and also means that there's more tokens listed. So it's simply better for traders if there's more liquidity. The second is just simply the brand name. People don't know about these forks of Uniswap, but they do know about Uniswap. And then finally, the third, which we could devote an entire episode to, is a lot of these projects have on-chain treasuries. So they essentially have tokens in a treasury, kind of like a corporate treasury in a way, that they can use to fund different promotional campaigns, awareness campaigns, and stuff like that. And so Uniswap, by being virtue of the largest AMM and having the largest market cap, their treasury is much larger than any other project. But to me, those are kind of the three main barriers to entry.
It's fascinating. There's so much in there that you've mentioned, and we want to keep these episodes, short and snappy. But when we go down the rabbit hole, you can see there's lots to unpack. I just want to sort of conclude on one point there that you made, which is that with a lot of these platforms, by being an early adopter and by adding liquidity, basically bootstrapping this network, you get rewarded with the thing that gives you sort of a stake in that marketplace, right? In that AMM. So you earn sushi or you earn uni. And I know some of these have funny names to people maybe coming from the traditional world, but get over it, I guess. But what's interesting about that is that in the traditional world of financial services, owning a piece of the exchange is sort of the ultimate insider's privilege, right? I mean, to have a seat on the New York Stock Exchange back in the day, or where you and I are in Canada, this Toronto Stock Exchange is basically jointly owned by banks and pensions and some public shareholders and whatnot, but, or has been historically. So this is the exact opposite of that, which is that anybody can be a stakeholder in this network, and by contributing value to it, earn their reward. And that seems like an awfully powerful model for scaling a network to do something like trading, or, as we're going to talk about in a bunch of other episodes, different aspects of the industry. So it's a very powerful incentive mechanism to create user adoption, because you can be financially remunerated for helping to bootstrap something. And I think that's a very powerful tool. So anyway, that concludes today's episode of DeFi Decoded. We are going to go into a lot more detail on a lot of this stuff later on. Please do check out 9Point's website, gogreenbitcoin.com, for more information about some of our products, and also to the 9Point Digital Asset Group website, where you can see some of our thought leadership on this area. And thank you, Andrew. This was a very great discussion.
Yeah, thanks, Alex. Looking forward to more. There's so much to talk about in this space.
And I learn something every time you and I chat. So thank you for that. Okay, take care, everybody. Bye.
You've been listening to the Alt Thinking Podcast by 9Point Partners. For more alternative investing ideas, insights, and strategies, subscribe by visiting 9point.com. The opinions, estimates, and projections contained within this recording are solely those of 9Point Partners and are subject to change without notice. 9Point makes every effort to ensure that the information has been derived from sources believed to be reliable and accurate. However, 9Point assumes no responsibility for any losses or damages, whether direct or indirect, which arise out of the use of this information. These views are not to be considered investment advice, nor should they be considered a recommendation to buy or sell. Investment funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Important information about the 9Point Partners funds, including investment objectives and strategies, purchase options, and applicable management fees and other charges and expenses, is contained in their respective prospectus or offering memorandum. Please read these documents carefully before investing. We strongly recommend that you consult your investment advisor for a comprehensive review of your personal financial situation before undertaking any investment strategy. For more information, visit 9point.com/legal.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not resident in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.